As mentioned last week and the session prior, we're covering the loan account classes for 3 weeks, this being the third and final of the series. Today we're going to go through fixed term floating rate loans and their associated features. Last time we went over revolving credit loans, features specific to them, and introduced the concept of rate tables. Today we'll show how rate tables can also be used on this loan type and the difference between floating rate tables and fixed rates on this loan class. As most will be aware, there are lending products out there that have a floating rate. For those new to lending or this software, I'll briefly cover off what that means. A floating rate, also referred to as a variable interest rate, means the interest rate on a loan can fluctuate over the life of the loan. This is in complete contrast to a fixed rate where it remains constant for the life of the loan. Floating rates are subject to change and are typically impacted based on what's happening in the wider financial market. You'll hear about this frequently in the media, in particular in and around the official cash rate changes, and often what is going on with the rates overseas. There are also lending models that involve a fixed term, where the lending is set at a fixed rate for a set part period, but not the entire life of the loan, and then coming off onto a variable or floating rate once this has expired. That is particularly common amongst home lending products, where the term of the loan is usually spread over a long period of time, for example 25 to 30 years. The reasons or benefits for having a floating rate from a borrower's perspective can include things like having the flexibility, depending on their lending contract specifications of course, to make lump sum reductions to reduce their loan size without incurring a cost like a fixed rate break cost. Receiving the benefits faster of an interest rate decrease in the market and potentially repaying the debt faster if they choose to keep their repayments at the same level while their interest cost reduces. And not feeling locked in if they're unsure how long they will require the lending for. On the flip side of that is, of course, that floating interest rates can rise and cause a borrower's repayments and overall interest costs to increase. From a client's perspective, a variable interest rate means that they benefit faster from being able to increase the rate on which they've lent funds out on already to minimise their own potential losses caused by wider interest rate rises. From a FinPower Connect perspective, we need to be able to cater for as many product variations and scenarios as we can. And with that, we introduce the concept of floating rates within FinPower Connect, the loan class itself, and its related functionality. The fixed term floating rate loan class offers almost everything the fixed term class can do and much more. As mentioned, rate tables are able to be utilised either in conjunction with a floating rate or on their own as a way to fix for a term and then move off onto floating, or to use a tiered rate system, or to use as a floating rate system on its own. Obviously, with any variable component, there are additional considerations. In this case, one is repayment values. Increase the rate, and the repayments would typically need to follow suit. If we have a look at the interest options page on the account type, you'll see here that there are some different options available to manage some of the different requirements of a floating rate loan, such as the interest rate change instructions. In order to keep the maturity date and prevent the borrower from ending up in arrears, it is common to increase the repayment to cover the rate increase, which makes sense. As a result, you have the option for a rate increase to set adjust payment as the default instruction, though this can be overridden on an account level to one of the other options of to be advised, which should prompt a user to get in contact with the borrower to discuss their options, or hold payment, which will retain the current value. There is also, as you can see, the ability to set defaults for the rate decreases as well. Additionally, there are options around when the rate change will take effect, the effective date or earliest date, or a combination. The effective date option will default the change in the floating rate change wizard to effective date that is then selected by the user facilitating the change. Floating rates explanation and ongoing maintenance. The key difference with this account type is, as suggested by the name, the ability to have a floating rate. But what does that really mean? The floating rate functionality is a different way to facilitate a true floating rate. Whilst some may achieve this effect using rate tables, either on this loan class or a revolving credit account, the floating rate option comes with some handy features to make that process easier on the end user. The floating rate option includes the ability to set a base rate on the account type and define the premium on the new account wizard. The premium can either be negative to generate a discount on the standard floating rate or a positive to add a margin to the base rate. Often in mortgage lending, as an example, there will be discounts given in a competitive market, usually based on higher lending values where the equity is within an agreeable range. In other words, less than 80% of the value of the security property lent. On the flip side of that, higher risk loans, generally speaking, tend to have a margin on them to aid in mitigating some of that risk for that lender. Of course, you could also have two different account types of this loan class to cater for the differing products that come with those two different scenarios as well. When licensed for fixed-term floating rate accounts, 3 additional wizards become available in the process menu. These are the floating rate interest change wizard, the review pending interest rates wizard, rate changes wizard, and the floating rate loan repayment review wizard. Each has its own purpose, but is all around making things streamlined for the end user to be able to easily facilitate the necessary changes on a bulk scale, including the interest rate itself, the necessary disclosures to the client, and potentially the adjustment of loan repayments where required. So we'll go through each of these wizards in more detail now. The floating interest rate change wizard. This wizard has 2 main functions, the main one being processing a floating rate change across accounts of a certain account type, meaning you do one account type at a time. This is handy if you have more than one fixed term floating rate account type you're working with on different rates. There's also a range filter page to further narrow down the accounts to be processed if required by accounts, account managers, branches, brokers, clients, client groups, client types, dealers, departments, and entities. A few things can happen when this wizard is run. First, it will process a future dated floating rate interest change for the account selected in accordance with the account type and any filters used. The date of the interest rate becomes effective depending on a few things. The effective date, as we talked about before, which is the effective date selected in the wizard, though there are some exceptions to this. The effective date in the wizard or the earliest payment date if ticked. And what this means is that the new interest rate will take effect after the first payment at the new rate, so that the interest rate does not charged within that interest period. This can be turned on to be ticked by default on the account type settings interest option page as referenced earlier. And third, if an account of the account type is being processed as currently on a fixed rate, the floating rate will become effective once that fixed term has expired and the account has then reverted to the floating rate. Second, the option is set with earliest date payments can be adjusted. This can tie in with the account type setting for a minimum notice period of new repayment. For example, if the client is wanting to inform their borrowers of a floating rate increase, they may wish in their disclosure to advise of the increase, but also give a period of time prior to increasing their repayments to allow time to ensure the borrower has been adequately notified prior to the actual repayment going up in value. In our example account type, we have the payment change set for 21 days after the effective date of the interest rate change. Fixed rate accounts are also catered for here, with the earliest date shifting to the day after the fixed period ends, so that the next payment after the fixed rate expiry will be on the new rate. In our example account here, we can see that it's fixed until the 2nd of August 2023, when the loan will change to floating. We can see here the floating rate is displayed as the new rate and is ready to go, pending any other changes in between now and then, of course. The schedule reflects that the repayments remain at the lower value until the next payment due after the loan has changed to the floating rate. The interest rate change process automatically adds a payment arrangement with overriding payments to cater for the remainder of the fixed period and then revert to the new regular instalment amount. The best part is all of this happens out of the box and as simple as running this wizard when using the floating interest rates. In our next example, the loan account has recently switched from its startup fixed rate to floating and shows a different result. It shows that the repayment will increase on the 2nd of October 2022. This falls in line with the instruction to not increase the repayment until at least 21 days after the effective date, which was on the 2nd of September 2022. The next payment after this date being the 2nd of October 2022. So you can see from these examples why it's essential to have a good understanding of the impacts of the options chosen in terms of the effective date and earliest payment, etc. when using that wizard. Third, a disclosure document is triggered, making it nice and easy for the clients to complete the notification to their borrowers of the changes. We can see here on our example, the log has been automatically created for the floating interest rate change, with the sample account payment revision advice awaiting publishing. That document can then be published by a user via the log itself, or will be picked up in the Publish Documents wizard in the next run. This image here shows the sample document and the information automatically added for accounts with payment instructions of adjust payment. This sample can be used as a template to add in whatever the client requires for it to meet disclosure standards and for things like a business logo and contact details, etc. Where the instructions are set to be advised, the document looks a little bit different, as you can see here. To set a document to be produced by this process, it gets set on the account type under Documents under the Payment Revision Advice event, and this is unique to this loan class. Coming back to the wizard itself, a report will be able to be printed of the successful changes, as well as a list left pending as mentioned earlier. The second function of this wizard gives the ability to preview your changes and generate a report of accounts flagged for the change. This can be very useful prior to actually processing the floating rate interest change, as it should highlight any anomalies prior to live processing the accounts. This also generates a list of borrowers with an instruction of to be advised who may need to be contacted. For example, like in the image shown here, we also get errors so that they can be handled at an account level if needed prior to formally processing the change. In this case, my account processes weren't up to date, meaning that the next payment date was prior to the interest change, which of course is incompatible and throws an error. To reiterate some of the other reasons the account may appear on a pending list include 1. An existing pending floating interest rate change exists. 2. Instructions for repayments are set to be advised. Or 3, like this one here, the account fails to calculate. If you haven't run the preview first, that's okay. Anything that cannot be updated or processed immediately, as mentioned, will be set to pending, which brings us to our next wizard. The Review Pending Floating Interest Rates wizard, as the name suggests, allows you to review and process the accounts left pending. When you get to the results page, the list will show you why it is pending so that you can change it based on what is required and then choose to adjust the payment, hold the payment, the impacts of which are detailed in the payment options block in the summary below the grid, as you can see in this image. You can also select an action of either accept or cancel, and then click the Save button to not process immediately, or click Commit to commit the changes. Our third and final additional wizard is the Floating Rate Loan Repayment Review wizard. This wizard is available to pick up loans requiring a review of their loan repayments, largely to capture those loans that now have payments that are insufficient to repay their loan in time for their original maturity date, for various reasons, like if the loan is using a rate table and not the floating rate. From here, the loan payments can be adjusted and a letter can be generated. You can expect to see a list of accounts in the results grid, like the image shown here. The criteria for a loan to be picked up in this process is the following. The account is a floating rate loan class and is an open loan. Maturity date does not match the current final payment date but is not already past maturity. This is intended, as mentioned, to capture loans where their payments are too low and would extend the term. The maturity date is within the shortened or lengthened periods. These fields are optional and to cut down the returned list if desired. You can see that on the first page of the wizard here. They will also appear in the list if the instructions are set to be advised, because this is intended to be picked up. You cannot action it within that wizard. You do need to adjust the instructions alternatively. As I've said in the last two loan class sessions, it's really important to keep in mind during the initial configuration stage with clients of their account types and things to ensure that they and you have an understanding of what FinPower Connect does natively, to ensure that any customizations are in place if required. In particular, surrounding their own client expectations in terms of where a payment will and will not be adjusted as part of an out-of-the-box process, and in and around ensuring they're adequately disclosing interest rate changes for both rate tables and the floating rate facility itself in accordance with the relevant legislation. Again, the responsibility ultimately sits with the client to ensure that the product and configurations produce a result that is fit for purpose and in line with any relevant legislation. However, if you're involved with supporting clients or the initial setup based on a scope provided, being aware of what FinPower Connect can do to aid them with this is key. FinPower Connect has several areas where a high level of customization is possible, even out of the box, and the account type admin library is a very good example of this. There is very little chance you can remember every single setting and what that setting does, which is why I cannot stress enough again that the simplest way to see the difference between what settings do is to test two accounts with the same basic values, like the advance amount and the interest rate itself, and compare the two. Whether this is the interest calculation methods, floating rate versus rate tables, or a myriad of other account type preferences, we do of course have our online help available, and we endeavour to update this as often as we can. A note on the online help: a lot of the time the testing method in conjunction with the tooltips already provided within FinPower Connect is enough to confirm your theory of what will happen if you use that option. And with the online help, generally speaking, it is much clearer and easier to understand once you've got the additional context of having it operating right in front of you. Rate tables. As we covered last week, are used for several different purposes, such as a way to pre-program interest rates when opening a new loan account or when changing the interest rate of an existing group of loans on that rate table. To choose which rate tables are available for your fixed term floating rate loan, this is set on the account type as shown here. To amend the rate table itself, as mentioned last time, it has its own admin library. It's important to mention here that when you're using rate tables, if the rate is amended on the rate table admin library itself, this does not generate a pending interest rate change, as I hinted earlier. It will automatically be updated and won't be able to be updated in the loan payment review wizard if the instructions are set to be advised. They will, however, as mentioned, still appear in the list. Other fixed term floating rate account type items of note. Where you have a fixed startup interest rate followed by a floating rate. This is when you're trying to complete a fixed rate followed by a floating rate within FinPower Connect on the fixed term floating rate account type. You need to be aware of what FinPower Connect does out of the box in terms of schedule calculation. If we take this example here, we can see that the account is fixed for 2 years and then reverts to floating with an expiry being on the 2nd of August 2023. If we take a close look at the original schedule, you can see that FinPower Connect has calculated the repayments at the same value even after the change. This is by design to ensure that the loan is sufficiently calculated to repay the loan by maturity. However, as this differs from other products in the market and can cause a little bit of confusion. These repayment values can be overridden by script to show adjusted payments on expiry of the fixed rate based on the projected new variable rate as at the date of calculation if required by the client, but this is considered to be a customization. You may recall what happened to this account's repayments after a rate change and on the expiry of the fixed term from earlier in the session, but if not, here it is again. We can see that the repayments have in fact been increased from the next payment due after the fixed startup rate has expired, but this repayment change was generated by that change in the floating rate and using the wizards to amend the repayments. Interest only is available on this loan class. However, it does spread the payments out evenly over the course of the year based on the total projected interest, differing to its cousin revolving credit. Often with interest only, they're expecting to see a varying payment amount based on how many days there are in a month and matching the interest charge on the loan. The revolving credit loan class offers this option, which we often refer to as true interest only. Some borrowers may prefer knowing exactly how much their instalment is going to be, so the fixed term floating rate interest only would suit that situation well. Some of the other settings that are good to be aware of across all account types. As this is our last session on the loan account classes themselves, and we covered the very basics in session 1, I thought we'd include some of the other settings briefly that can quite drastically change the way a loan behaves. This includes options to extend out the term, what controls the amount that is considered to be overdue, which balance to charge default interest on and when, and what happens when a borrower is on a fixed rate and they're going to repay early, as an example. On the overdue and defaults page on the account type, you can, as mentioned, choose whether or not a loan is overdue based on the contractual or actual overdue. This topic has its own session to explain the differences, but there is also a good explanation and help as well as shown here. The options for this also extend to when default interest is charged and on what balance, and the basis in which the default interest rate is calculated. On the payments page, this is where you'll find settings related to payment options. obviously, including the allocation of the payments, rounding up regular payments, allowing a credit or zero balance prior to maturity, and more. The grace period options, which can impact all sorts of things, including overdues and the default interest. So this is a place that you really want to become familiar with if you can. The other page where some tricky little settings live, like the show history rating information, which is needed for comprehensive credit reporting and other summary page related options. And the transfer and withdrawal settings as to whether these are allowed and whether they must include a common client, and more. And the close options page. This is where you can set whether they have a closed pending status or whether they go straight to being permanently closed, and the loss formulas where you can set custom for more complex methods, and whether a closed account can be reopened or not. That one trips people up all the time. For the loss formulas, in New Zealand there is an NZCCCFR Formula 1 built in, but there is a good explanation and help around what the scenario covers and any situations not covered by the basic legislative formula will need to be scripted. Auditing. Another part of the initial configuration and at times ongoing support is choosing what the clients want audited at an account level. These settings are found in Global Settings under Auditing and then Accounts, as shown here. As you can see from this list, there are many options available. For example, creating an audit trail anytime the maturity date has been changed. You can then also choose whether to add a log or not. If log is unticked, it will only appear on the audit page, which many users, depending on their permissions, may not have access to. So it is a useful way of allowing users to see some of the audited changes, but not necessarily all. Finally, a couple of commonly asked questions. What does the fixed term floating rate class not have available? So just as a quick overview, there's no ability to use pre-computed interest or the related post-maturity settings like a fixed term loan can, and it doesn't have the minimum payment options or statement-driven payments like the revolving credit loans can, as an example. But otherwise, this is a very versatile loan class and certainly has its own features that make it an excellent choice. Again, we do have the table of comparison document, which will be available in the links in the description on YouTube. And rate tables and the loan payment adjustments in bulk. So we briefly touched on this before. And for the majority, they should come up for processing in the loan payment review wizard, depending on the instructions and a few other things. Knowing the exceptions to this is key, and making sure clients are set up to run the right reports to pick up any anomalies. Some example reports are here, like the account exception list report, the loan interest rate variance list report, and the loan maturity variance report, for example. Upcoming sessions. Now that we've covered the loan classes and broadly the account type settings, the application support sessions will be moving into some more targeted sessions, covering off some of the bigger functionality and processes on the accounts themselves within FinPower Connect, such as payment arrangements, promises and additional payments, refinances, restructures, current versus contractual overdues, and withdrawals and refunds. We've come to the end of our session today, and as always, if there is any additional information you seek, please don't hesitate to contact the application support team for user interface queries or code support in relation to code-specific questions. As mentioned previously, there are many scripting events available throughout the many processes involved with accounts that can be utilized for custom requirements. Next week, code support is going to have Martin amaze you with some more fascinating content.